The last two equity market corrections have actually treated us fairly well given our positioning in that they've been mainly technically driven and not fundamentally driven by the US economy. So in January and February, it was almost exclusively technically driven, very isolated to equity markets. We held in there very well. We were positive both of those 2 months. In October, we gave back a little bit of our gains for the year, but we're still up much better than the hedge fund indices. We have a lead over equities, bonds, high yield bonds, etc. We couldn't completely prevent losses. We do have about 14% in the event-driven equity and multi-strategy space where most of our losses occurred. However, we had positive cash flow in structured credit and in TRUP CDOs. Our credit hedges performed very well for us, which are mainly short high yield. And also last month, somewhat surprisingly, interest rates went higher despite equities selling off, which is a very rare occurrence, and we made money on our rate hedges. So we think in a period like this, protecting capital is paramount, and we think we did a pretty decent job of that last month.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.